Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the Wick Fill Trading Strategy, a powerful technique that can enhance your ability to navigate the market volatility. This strategy focuses on identifying and leveraging weak fill to make more informed trading decisions. So by understanding how to effectively use weak fills, you can potentially improve your trading outcomes and better manage your risks. So if you are interested in refining your trading skill and learning a new approach to analyzing the market movement, be sure to watch until the end as we will break down a strategy step by step, ensuring you have a clear understanding of how it works for your own trading. Now, what is the Wick Fill Trading Strategy? Now, this is a technique used to analyze the market movement by focusing on candlestick patterns. It involves identifying wicks, which are thin lines extended from the bottom or the top of a candle, and observing when the price moves back into the range of the wicks. This movement is known as wick filling and can be a valuable insight into market sentiment and potential trend reversals and continuation. So let's look at a step-by-step process of how we can implement this trading strategy. That's how we can use this Wick Fill strategy. We first start by identifying key levels by marking out on our chart key support and resistance areas in our market. And as I can see that here is a support region that turned to a resistance area. This was a resistance area that turns to a support region on the market. You can also see that this area here is a support region that turned to a resistance area on the market. This too is a resistance area that acted as a support region on the market. Finally, this area would be my support region. So basically, to mark out your resistance and support, you just go for your previous swing highs and swing lows where price have failed or broken and being respected after it was broken. These are the areas that you can assume, or we assume, to be our resistance and support regions. So we have to keep them ideal for observing weak fills. The second step is to identify our signal candle. We look for the candle with a long wick. This indicates that buyers or sellers were unable to sustain their push in the particular direction. This can signal a potential reversal. As you can see, at this area we can see a long wick to the upside, a long wick to the downside. These are the long wicks we are talking about. Even at this area, which is a resistance area, we can see this is a long wick to the downside, signaling buyers at one point. Buyers were in this market before sellers came in and pushed price to the downside. Looking at these areas too, we can see long wicks showing signs of strong rejections on this support area. Now the third step is to wait for the wick to fill. After identifying your signal candle, you wait for a substantial candle to fill the wick. This is crucial because it confirms whether the market is reversing or continuing in the direction. And as you can see, after the wick closed at the upside, it was filled with another candle that closed above. This signals that we are going in the direction. You enter your trade once the wick is filled. You enter a trade if the wick is filled to the upside. This indicates bullish confirmation or bullish continuation or a reversal prompting a long position. So we can see in this area, when it filled to the upside, we enter and we put our stop loss below the wick area. This is where we would enter after the wick has been filled. This also is an area where we would enter when the wick has been filled. When the wick has been filled, we would enter this area. This signals a reversal. We can see it was in a downtrend before it reversed to the uptrend. So this is basically how we can use this to our advantage. Then for a selling opportunity, This would have been a good place to enter your sell position when the wick was filled to the downside after seeing the wick. This is how to enter the trade. You enter a selling position when the wick is filled to the downside, a bullish position when the wick is filled to the upside. Remember, your stop loss is very crucial. You always set your stop loss just above the high of the wick candle, and in a selling scenario, then in a bullish scenario, just below the wick of the candle of the bullish candle or the wick filled candle. Then you define your take profits based on the strength of the trend. You can use a fixed take risk to reward of 1:2, minimum of 1:2 for your risk to reward. 1:2 or 1:3 as the case may be. You define your profit target and you make use of it. It's also important to consider your position sizing to manage your risk effectively. Never risk more than 2% or 1% of your trading capital on a single trade. The highest you should risk on a single trade should be 2%, minimum of 1% on your trade. You can also, the step 6 can be to also verify these entries with other indicators such as our RSI. And as we can see, this area we saw a signal of oversold condition signaling the market wants to reverse to the upside, and it's what happened in this area. And as we can see, this area in the market showed an overbought condition. This area also showed an oversold condition that is reversing to the upside. This is how you combine using other technical indicators to further give yourself more confidence in your trade. Step 7 is to always monitor your trade and adjust accordingly. You continuously monitor the trade performance and adjust your strategy when needed. Be prepared to close a trade if it doesn't align with your initial analysis or if the market condition changes. So you have to be always vigilant during your trading section. And when you are in a trade, always look out for what the market wants to do. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. And if you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.